Yo, what is up, guys? It is Monday today, July 16th, 2018. It's about 10:24 p.m. here on the East Coast in New York. Today, I thought I'd do a little bit of a fun video. A lot of people have been asking me where I think Bitcoin's going. I was going to make this a traditional technical analysis video, but I thought I would give you a look into kind of my thought process on where I think the cryptocurrency market in a whole is going and where I think Bitcoin is going to go in terms of a price point within the next year or two. Now, quick disclaimer, I'm not an expert at this. I don't trade full time. I am a trader pretty much as a hobby. I'm mainly an equity derivatives trader in the stock market. I trade equities on the long and short side. About a year ago, I got into trading cryptocurrencies, done pretty well. Not an expert on technical analysis by any means, so please don't take this as 100% rock solid advice. I just want to start pretty much a dialogue, giving you guys my opinions. You probably may disagree, you may agree, and then we can kind of go back and forth and learn from each other. But here's kind of what I think. So, if we go all the way back to 2013, and for those of you who are new here, please subscribe to the channel if you like the content, and also if you want to message me directly, just click the link on my Facebook and shoot me a message anytime. So if we go back to 2013, what we'll find is that Bitcoin sort of topped out around 1,178. So if we take the high of Bitcoin to the low, roughly give or take, this doesn't have to be exact, we've had about an 85% correction. And I was doing some research back in 2013. I was looking at both bullish and bearish articles for Bitcoin. Obviously, in November, December, when this huge bull run was coming out, and full disclosure, I didn't even know what Bitcoin or cryptocurrencies were in 2013. I wasn't in the market at all. I've never heard about it, never traded it, never touched any of these assets. So I just want to make that clear for you guys. But there was a ton of bullish sentiment. Everybody on CNBC, Bloomberg, all these big financials, even the Wall Street Journal was saying, oh, new crypto assets. They were explaining what blockchain is. Oh, it's a new technology that's going to change the world, yada, yada. And that pretty much drove up the price into bubble territory. But I've also said that I will debate. I don't think that Bitcoin per se is a bubble. I do think that cryptocurrencies in general, all these altcoins are a bubble, and that the majority of them will go to zero. But trade them as you please, because you can make a lot of money due to their volatility. Anyway, it pumped it to the moon, and then as Bitcoin was correcting and pretty much plummeting almost to 100% of its value, there was all these articles about how Bitcoin is dead, about how it was the biggest bubble on earth. There was a bunch of pundits coming on TV and even doing interviews. There was one that I may link in the description due to the reason why Peter Schiff is probably one of my biggest mentors when it comes to fundamental economics. He is a really, really good resource to use if you want an absolute overlook of how capital markets work, how markets work, and really why fiat currency is terrible and this and that. But that's a story for another day. And Peter Schiff hates Bitcoin, so that's just another disclaimer there. So that drove the price down to about 85%. Right, so if we figure if the same exact results pan out from 2013 to today, if we have an 85% correction, that would bring us to roughly, let's see, about a $3,000 Bitcoin. Now, I want to start a long position in Bitcoin, and let me define what I mean by a long position, because I do want to start a long position in Bitcoin over 1, 2, 3, or 4 years time frame, and I want to allocate at least $20,000 to size into a position in Bitcoin alone. And obviously, I have a lot of money in Tether right now, in which I will use to trade altcoins and the like. But my thought process here is I want to size in $20,000 into the cryptocurrency market and pick up anywhere between 4 or 5 Bitcoin, right, for a long, long play. So that would bring us to around a $4,000, $3,000 Bitcoin. Here's where it gets interesting, and here's where my thought process, I know I'm rambling on, I really don't get to the point. But if we go here and we time box this, so if we go to a date range, this is what I'm looking at. All I'm looking at is I want to see when Bitcoin got back to its all-time high. So from the 2013 bull run, when was the point, how many days, how much time passed until Bitcoin got back to that all-time high? So if we can scroll in here, and my computer's kind of freaking out here. It should be, let's see. Sorry guys, I can't control my computer today. I don't know what's going on. That brings us to about 1,133 days. Let me see if I could kind of drag this down a little bit. So it brings us to about 1,139 days. Not for the bear market to be over, but just so that Bitcoin could get back to its all-time high. And then obviously we had this, huge crash. That's probably because all the people that bought at the top were like, finally, I can get out of this market. I just want to wash my hands with it. And a ton of people that were accumulating here probably took a lot of profit. So if we do basic math, and again, this is all speculation, this is just my thought process. If we go 1,139 days for Bitcoin to go from its all-time high back to its all-time high, and we divide that by 2, we get 569 days. And the reason why I'm dividing that by 2 is because I believe that Bitcoin will be back to its all-time high of 20,000 in half the time that it took in 2013. And the reason why I believe that is because there is a ton of fundamental value being built in the blockchain industry, not only in Bitcoin, but even streamlined through other companies that could benefit them in terms of, a logistics standpoint, pretty much anything. And there's also a huge push in terms of regulation, Bitcoin ETFs, which we will get into in a minute. And the SEC, most importantly, is willing to work with Bitcoin and other cryptocurrencies. Coinbase is adding more coins to its platform. So if we go to the date range again and go from the top, about 20,000, and we go over 569 days. And again, this isn't an exact science. This is just how I'm thinking. And this is just kind of a fun video. I don't in any way think that this will pan out 100%, but this is just my thought process. So 569 days. That brings us to July 8th of 2019. So for my analysis, due to the fact that more people know about cryptocurrencies, more people are involved in cryptocurrencies, there's been record numbers of attendance at blockchain events. Obviously, it blew up all over YouTube. There's a big push for institutions to come into the space. And I do think that institutions will get into the cryptocurrency space, but there needs to be an easier way for onboarding of liquidity. And I think that Bitcoin ETFs, cryptocurrency ETFs, will be a better way for institutions to sort of get into the space in terms of a liquidity onboarding source. So if we can have something like this, and this isn't an exact science, what I think is going to happen is we're going to have a little bit of a push. We'll probably top out at about 7,500 to 8,000. Then we're going to have a capitulation down to about 3,000. Just basically due to market sentiment, and this is still clearly a downtrend. I don't think this is any form of accumulation pattern. I really like to see distinct accumulation. So if I can accumulate Bitcoin starting sub 5,000, I want to size into a position anywhere in here. This is my target box for a long position. Remember, 3 to 5 years is where I want to hold my Bitcoin, accumulating it here. I won't look at it. I won't talk about it. And I have allocated an amount I'm 100% willing to lose flat out because I have acquired a decent amount of money for my age by trading in the equities market, having a full-time job. I live in New York. I make a decent salary. So $20,000 is my risk tolerance for a long-term play on Bitcoin. So if we can see sort of an accumulation and have us half the time that it took for Bitcoin to reach its all-time high in 2013 till now, that would be about, let's see how much of a percent gain that would be for me. And again, this is just a fun video today. I was kind of bored, so I wanted to make it. So that would be about, let's just say my average price is $4,500, right? So 4,500 up till there, that's about a 352% gain. So let's go 20,000 divided by 4,400. Or wait, hold on, 20,000 divided by 4,400. That gives me about 5 Bitcoin, give or take. So let's see, 20,000 times 352%. So that would make me about $70,000 in profit off of that trade, off of that long-term trade, should Bitcoin get back to its all-time highs. I'm not talking about surpassing its all-time high. All I'm talking about is just getting back to its all-time high. And due to the factors, due to the positive market sentiment, I think that Bitcoin will do it in half the time. Obviously, this is pure 100% speculation, so don't take my word for it. This is just kind of a fun video to show you guys my thought process. And please leave me comments down below if you think this is a good kind of analysis on this. I know this isn't straight technical analysis. If you want to get really, really in-depth in terms of technical analysis, Google and YouTube Fibonacci, people who are really good at Elliott Wave, and yeah, so if you can find any cryptocurrency YouTubers that are really good at Elliott Wave analysis, that can give you a pretty spot-on point of where Bitcoin is going. I'm not that skilled in Elliott. I know a little bit of it, but I'm not as skilled to make a video tutorial on it. So if we jump over here, here's what I wanted to see, because this came up on my computer today at work, and BlackRock, I actually have a couple friends that work at BlackRock, and it's that Bitcoin price jumps as world's biggest ETF provider, BlackRock, looks to get involved. And one of my biggest pushes was that, hey, if I think that Bitcoin is going to grow to, say, $40,000 in 5 years, there needs to be an easier way for institutions to get involved. And in my opinion, that's ETFs. So if we explore this article a little bit, it says, despite the company's previous skepticism towards cryptocurrency field, BlackRock Inc. is looking at ways to take advantage of the fast-growing cryptocurrency market. Insiders familiar with the matter told Financial News London that the world's largest ETF provider has assembled a working group which consists of members from different divisions, including Terry Simpson, a multi-asset investment strategist. The sources also suggest that the team will be investigating cryptocurrencies, ultimately aiming to determine whether BlackRock should get involved in the field or not. And this is interesting because back in October of 2017, when the freaking altcoins were going parabolic, Bitcoin was going through the freaking roof, BlackRock made this statement. They said, I don't quite get the point of a Bitcoin ETF in any case, because we're talking about ... trading products that are difficult to access. If Bitcoin is ever successful, again, not my thing, I wouldn't recommend it. But if it were successful, why would you need an ETF to access it? So earlier this year, BlackRock's chief multi-asset strategist and managing director said, at this stage, Bitcoin is not an investable asset class. BlackRock manages a ridiculous amount of cash. So if we can capture just a portion of BlackRock's capital that will flow into cryptocurrencies, I think that it could be a really good indicator that mass adoption is coming. Because if BlackRock's clients are showing interest, if Goldman Sachs clients are showing interest in the cryptocurrencies market, as their fiduciary duty, you have to do what the clients want. So it's worth nothing that BlackRock has been losing top-end talent to the cryptocurrency field for quite some time. I can attest to this because some of my friends that work at Morgan Stanley, I won't name any names, they have left Morgan Stanley Asset Management to go work at cryptocurrency hedge funds. So I know this firsthand. I just thought I'd give you guys some insight on that. So a senior portfolio manager overseeing upwards of $1.5 billion in assets left the company for a cryptocurrency platform. Adam Grimsley and Michael Wong, two of BlackRock's fixed income managers, also resigned earlier this year and launched a cryptocurrency hedge fund. And I know a ton of my friends left, and actually one of my friends left and launched a cryptocurrency hedge fund, which I work for now, sort of doing intern work, writing articles, doing research, but you guys know all that. So the alleged move of BlackRock caught the attention of cryptocurrency trader and host of CNBC's Crypto Trader show, I'm sorry, I just butchered that name. But here's the difference. So this was one of his tweets. He's like, the difference between a future and an ETF is that an ETF has to buy the underlying, taking liquidity out of the market. So when the world's biggest ETF company is looking at crypto and the SEC has no real reason to block the next ETF, it could be a little exciting, which I think is 100% true. And so this news also caught the attention of Arthur Hayes. Funny story about Arthur Hayes, I actually met him at this year's recent blockchain event at the Hilton Hotel. I didn't go to the event. I didn't pay to go to the event, but my office is close by. So I was just like walking around. I didn't get into any of the main events, but you can kind of walk around the lobby. I ran into Arthur Hayes and I actually ran into Tom Lee. I introduced myself to both of them. Really cool people, really down to earth people. But that's besides the point. So co-founder of the cryptocurrency trading platform BitMEX, who believes that a regulated ETF could have substantial impact on the price of Bitcoin. And this was one of his quotations. He's like, but we are one positive regulatory decision away, maybe an ETF approved by the SEC, to climbing through $20,000 and even $50,000 by the end of the year. So if you take Arthur Hayes' prediction and you take my prediction, sorry, I'm not signed in the trading view, so I have to kind of reload this. So all this stuff is going to go away now. So if you take Arthur Hayes' prediction and my prediction about the whole cryptocurrency or Bitcoin going back to 50,000 by the end of the year, which I really don't think that Bitcoin will go back to 50,000 by the end of the year, but I do think that by this time next year, it could definitely be back at all-time highs as a conservative guess, because as we said before, if you want to review this video, for Bitcoin to go from its all-time high in 2013 to reach its all-time high again was about 1,135 days. If you divide that by 2, that brings us to about this time next year. And that's when I want to start sizing in. Anything around 5,000, I want to get an average cost on my 5 Bitcoin of about maybe 4,000, and then just sit tight, trade my altcoins, and then there's no reason I shouldn't make $250,000 by this time next year. And I know that may sound, like arrogant to say, but I plan things out, and if it doesn't work out, fine. But, just at least I tried, and at least I kind of made some sort of fundamental analysis at it. So, and here's another thing I want to kind of bring up to you guys, and I don't want to make this video too long because I know I'm sort of rambling on, and I really do want your opinion. So I was reading Barron's the other day, and there was a really interesting article in regards to rules and regulations in regards to the ETF market. So this article, I believe, came out on June 30th of 2018, so about last weekend, and I was reading it, even though this doesn't have to do with cryptocurrencies per se, but due to the fact that regulations are easing up on exchange-traded funds and the way the SEC approves them for launch, I think this is going to intertwine perfectly in regards to the fact that we're making a huge push for Bitcoin ETFs. So I'm not going to read this whole article. I'm going to link everything in the description for you guys to read as well. But the main thing that I thought that was really good in this article is it's going to be really advantageous and it's going to benefit actively managed ETF funds the most. And the reason for this is the article talks about something, if you guys don't know, if you guys are not too familiar with something called a custom basket, it's going to allow actively managed ETFs to use custom baskets instead of the pro-rata baskets that they have been using. And the reason why this is good is because a pro-rata basket is not tax efficient, right? So if you're an ETF manager and you're moving funds around all the time, you're incurring charges from buying and selling the actual underlying security that can trigger taxable gains for the shareholders. But if you have exposure to a custom basket in opposed to a pro-rata basket, you can really save a lot of money for your clients in terms of your taxable gains. So I actually have the physical copy of the paper on me, but I'll scroll down. I really don't know where the part is on the screen. But for those of you who don't know, I'm about to read a little piece of the Barron's article here. It's like custom baskets give fund sponsors and trading partners more flexibility to rebalance or adjust portfolios behind the scenes. Swapping shares of Apple for Microsoft, for example, rather than buying or selling the stocks in the market, a process that incurs trading costs and may trigger taxable gains for shareholders. I actually have a couple friends that work for banks that work in the custom basket space in terms of creating these custom baskets. So that's really my whole synopsis on this, guys. I know I really like to tie in cryptocurrencies with the equities markets, kind of get the whole picture, the overall picture in terms of the meta game of what's going on here. But that's really about it, guys. So, I mean, if you like this video, give me a like, subscribe to the channel. If you didn't like it, if you thought it was BS, tell me why. What are your thoughts on Bitcoin? Do you think that this streamlined push for ETFs and regulations that are easing up on the creation of ETFs, if you don't think that's going to help Bitcoin ETF, kind of reach the market sooner, let me know. What are your thoughts? But I am super, super bullish on Bitcoin, blockchain, and cryptocurrency technology. And there's no doubt in my mind that within a year or two, we'll be back at all-time highs. I'm not going to go out on a limb and say, hey, I'm Arthur Hayes. I'm going to predict $50,000 Bitcoin by the end of the year, because the bear market is very much still intact. I think that a lot of people have a sour taste in their mouth. But I do think that once we crack about $10,000 again, you're going to start to see FOMO action come in. You're going to start to see a bunch of news saying, oh, the creation of a new Bitcoin ETF. Coinbase is going to start to add, Ethereum Classic. You're going to be able to buy Ethereum Classic. It's rumored you're going to be able to buy Basic Attention Token and the like. So I think there's going to be a lot of FOMO that's going to start to kick in once we crack $10,000 again. And by that time, hopefully, I'll have my 5 Bitcoin dollar cost averaged anywhere between $4,000 and $3,000, and that'll be my long position. That will not include any of my short-term swing trades. And one last thing, guys, I was reading this article in the Wall Street Journal that big advertisers embraced blockchain to root out digital ad spending waste. And I don't know why I can't get this full article. I do pay for the freaking Wall Street Journal, so I don't know why it's not letting me. So I'm just going to read this one little paragraph because I thought it was really interesting, because I remember watching an interview, well, not really an interview, but a conference that Dan Larimer put on in regards to EOS. And what he was kind of saying is that the EOS blockchain is going to be a third-generation blockchain due to the fact that it will be able to perform at real-world standards, right? So you have Visa, MasterCard that can do 40,000 transactions a second. You have like 100,000 Facebook likes per second. So there needs to be a ton of scalability that needs to come into the cryptocurrency space for this to be of any value to anybody to use it in real-world sense. Because if you look back to December, when you had Ethereum blockchain being backed up due to the CryptoKitty thing, like, that's not real world use case. That's like infancy stages. That's why I'm saying I'm not a developer, right? I don't know how to code. I'm just learning JavaScript now. But people that are heavy into tech will understand this blockchain technology. A lot of these cryptocurrency platform plays will not work due to the fact that they're not scalable. So one excerpt out of this article was really interesting to me that made me think of what Dan Larimer was saying and his vision of EOS about how it should be able to do 1 million transactions per second. It says, digital advertising exchanges process millions of ad transactions every single second, but it can take several minutes for transactions to be recognized in a blockchain and hours for payments to be settled, according to Isaac Lidsky, president of, I don't know how to pronounce that, company startup, the technology for digital marketing sector. And he says, I believe in blockchain, I believe in artificial intelligence, but at this stage, we're not interested in blockchain due to the fact that it's not scalable. So those are the main concerns that I'm seeing from major companies like Google, AT&T, all of these huge advertisers, is that it's not scalable. But that's not going to be forever, in my personal opinion. I know there's a ton of platform plays that are coming out that are going to be 10 times more scalable than Ethereum. And when that comes out, it's going to get very, very interesting. And I think that's when we're going to have the second wave of this bull market. That's when I think things are going to go absolutely parabolic. I think that the platform plays that can withstand those millions of transactions and companies start to use those for real world use cases, I think things are going to start to get interesting. And again, disclaimer, I could be 100% wrong. I'm not an expert in cryptocurrencies. I'm not an expert in blockchain. I'm not an expert in financial markets. But I do quite a bit of research. I'm always reading about maybe 3 to 4 hours a day on all different topics, and I do have experience trading in equities markets. So that's my thought process. This video has gone on way too long. Let me know your thoughts in the comments below, and as always, I will see you in the next video. Take care. Until next time.